So like I said, that's who it is. I'm going to move this over to my other screen so that way we can get started on the presentation, or rather the PowerPoint that I have here. And we're going to break it down, or rather I'm going to mark it down for y'all. So let me go ahead and share my screen real quick. And we are, let me say market desktop 2, or say desktop desktop. Let's just go with this. All right. So y'all should be able to pretty much see the screen. Let me make sure I can get it all. All right, there we go. So use the chat button and tell me if y'all can see the screen real quick. Okay, great. Yeah. So I'll answer all the questions you have in the very end. That way I can keep it moving really, like, just simple and all that, so I can get it out of the way. I'll just answer your questions at the end. So as you can see, we have market structure, and it'll be presented by me. So let's go ahead and get started on that. So let's go ahead and get that clicked over. So we have 3 target lists for today, all right? So basically, we're going to see how to identify if market structure is going up or down, how to identify time frame confluences, and noise versus significant structure, okay? And every single one of those will be presented today and in that same category, okay? So how important is each confluence? So in week 1, I pretty much showed you everything regarding trend and rejection zones, but we haven't whatever confirmation yet. However, once you start learning confirmation, you're going to see how each and every importance every confluence is. But as you can see, market structure and trend are your very highest importance of confluence in trading the market, okay? So once you understand how to identify market structure, you'll be able to identify reversals or continuations, okay? So trend is pretty much where the market is going at the current moment. So with that being said, it's like, you just go market's going up, that's cool. But the thing is, you can't just say with trend, market will continue going up. Market structure will tell you the market will continue going up. So yeah, as you can see here, rejection zones are basically your support and resistance zones. So they are actually, to me personally, I'll put it at 0.5 because it's not that important to me whatsoever. Okay, it's not. So, but I just put it here in terms of basic retail knowledge, because in basic retail knowledge format, it's quite important. But in terms of the way me and Cozy trade, it's not important at all. So, and let's say we had our model of the way we trade. Market structure will be at 5, trend will be at 3.5, confirmations will be at 4.5, and then rejections will be at 0. So understanding market structure, which is price action movement, basic price movement. You want to understand higher highs, higher low, lower lows, and lower high. So over here, you can see basically how we have a higher high, higher low, higher high, higher low, higher high, and that shows you trend. But that does not only mean trend, it also means market structure, because you see how each higher low breaks the higher high every time. So later down the PowerPoint, I'm going to show you exactly how you identify market structure and all that kind of stuff and how you use them, okay? So you just make sure you understand price movement and how to identify your trend, because trend can also translate to market structure. So if you don't understand trend, you probably won't understand market structure. If you don't understand market structure, you probably won't understand trend. They pretty much go off each other, okay? So just make sure you're understanding your higher highs, higher low, higher highs, how to identify them and all that kind of stuff. And remember when I told you, when you're going to look at a chart, make sure you use tradingview.com. Cozy will go over that, so you will see that part as well. So understanding market structure continued, you want to focus on your main swing points. And what I mean by that is that when you look at a chart, there's going to be a bunch of zones and all that kind of stuff, right? That's what we call noise. The main swing points are usually from your swing high to your swing low, all right? I'm also going to show you that in this PowerPoint as well. I want you to understand that time frames can trend in opposite direction. What do I mean by that? The 30-minute time frame might be bearish while the 4-hour is bullish, okay? So how do you identify what you want to do if they're opposite, if they have the opposite direction? Basically meaning, let's say that you are a day trader. You're going to want to stick with the 30-minute because you have an objective, okay? But if you're a swing trader, you want to stick with the 4-hour because you have an objective, okay? So you're trying to swing long term, so 4-hour and above, all right? So it all depends on what your objective or your goal is what time frame you use and how you use the confluence and all that kind of stuff. Market structure will not work 100% of the time. I want you to understand that nothing works 100% of the time, all right? The most important thing of identifying direction in the market is basically market structure, okay? So like I said, if you want to identify a trend, it's going to help you identify if it's bullish or bearish. And then if you want to identify a market structure, basically you got to be able to identify your higher highs and your lower highs and your lower lows and your lower highs, I'm sorry. So identified time frame structures, basically combining higher time frames to pick from higher hour one all the way to the weekly. You can also check the monthlies if you want to. I don't really care to because the monthly is just a really slow time frame. And then identify your lower time frames are basically the 1 minute and the 50-minute time frame. So those are basically your lower time frames. So here we are going to go over market structure of the bearish example. So here's the live example, which was taken from IC markets. Okay. So I'm also going to use the pen. All right, as y'all can see the pen, I believe. Let me go ahead and get the pen out of here. So great, we have the pen. Okay, so each and every single one of these red points are what we call swing points. Okay, so when you look at a chart and you zoom out, you want to be able to see a chart like this. So this is a Forex pair, but the thing is like you can translate all these things that I'm saying into a stock chart. Okay, I just tend to show you a Forex pair because it's more clear, more precise, and just easier to unteach and all that kind of stuff. So as you see all these swing points, you can see how each swing point takes out a previous low. And what I mean by the previous low is basically you see this location right there. You see this location, you see this location, you see this location, okay? Every time price is taking out one of those lows. So when that happens, you can see how price goes up. I'm sorry, let's go. Goes up like this and comes down and then takes out this low. What does that mean for me? Price is continuing bearish because it take out that previous low, which was significant. All right. So as y'all can see, we had a probably like a higher high, then a higher, or rather, let's say lower high, then a lower low, then a lower high. Your lower high will also be your next significant structure in terms of simple market structure. Okay. Let me go ahead and clear this pen up real quick. Let me click this.
Yeah, go sit over there.
What? Actually, no questions. Give me a second. Let me mute you real quick. I'm not going to take any questions right now because I just want the presentation to go fluid as possible for now. I'll answer your question at the very end. So as I was saying, pay attention to your swing points and you want to identify your market lows, okay, and your market highs as well. So every red point is a swing point, okay. However, how you identify whether or not they are a swing point or significant is basically based off the fact that you want to see if you can identify this. Each and every one of those are swing points. Here, 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 and here. Okay. And then same concept as you're going down. Right there, right there, right there. Okay. Right there, right there, right there, and so on. Okay. So that's how you identify your swing point. But on a bearish moment, your goal is to take up the next low. Okay. So every time price goes down, you must take out this low for structure to continue down on the downside. Okay. So if structure is not going down or not taking out that previous low, you're looking into a possible reversal. All right. So as you see price comes up, it never makes a new high. So like as you go up there, it never makes a new high, right? And price comes back down. And then you can see how it makes liquidity, which I will go over later in this presentation. And it comes back up, but it does not make a new high. So we're still bearish as of right now. Okay. And then price comes down again, it finally takes out that low. So as you can see, that's actually significant structure right there. But I don't know why this one was circled as one. But like I said, this was taken from IC market. So let's bear with them. So yeah, as I was saying, as you see price came back up, did not make a new high. So we are still bearish because this was significant structure. And then it goes down, consolidates a little bit, and then breaks structure again. All right. So as y'all can see, it broke structure again. But now this is the significant structure. And what I mean by significant structure is basically that any particular high that takes out that next low will be your significant structure. For all these previous circle red points are your swing points, okay? Swing points are important, but to me, I like to look at the significant structure because it's just more important to me. So it just really depends on who you're learning from, who you're taking your knowledge from, and all that kind of stuff, all right? So just pay attention when you're learning market structures, who you're learning from, because I'm not gonna say anybody teaches it wrong. It's just if you get it from someone else, then your idea of market structure might be different from mine. Okay. So yeah, and then as you can see here, price comes up, never makes a new high, like right up there, never makes a new high. So in other words, price comes back down and takes out that low. And I want to show you something here really quickly. Is basically erase pen. Let me click a minute. And then so as y'all can see here, this is a swing low, right? Let me get it more clear. So that was a swing low. clear pen. Let me see how to clear the pen. So as y'all can see, that's the swing low. All right, it made liquidity again, like I said, but this was the high that took out that last low. In other words, this is your swing point. But what happens after that? Price broke structure. So what does that mean to me? This is your possible area for a reversal. So if I drew a support right there, you're going to start seeing how price is consolidating. And if I take you to the next slide, you're going to see how price reversed. But yeah, once you see that structure is broken on significance, you can basically figure out how to catch a reversal. Okay, so that's just an example of using the market structure of the bear. All right, and looking at that, and let me take a really quick look. Yeah, perfect. So next up we have, let me go ahead and click the next slide. So this is going to be a bullish example. Okay, so as y'all can see, if I draw a line all the way down through here, this was a bearish formation. Let me see, BE. That was a bearish, and then this is the bullish formation. Okay, so price was bullish here until this structure was broken right there, which made it bullish. So I'm going to go over that as well. So basically, what I'm basically saying here is that since we can see that, you know, we have those. Okay, here, let me start over. Price is bullish here until the structure was broken. Okay, so what I told you, basically, price will remain, how do I call it? Significant or in one direction until a low or high is broken. So as you can see here, this point is highlighted because it is significant. All right, and you see how price broke through. What does that mean? We are now switched over to the bearish market. Okay, so what we got to do, we got to start looking for our entry, and of course we draw a resistance rejection zone. We can see we can catch a sell from here, and which is what happened. And then your target lows will obviously be this liquidity area, which is known as liquidity, and then you can technically, you know, have your take profit somewhere like down there, or even over here. But overall, I'll probably say take your profits around there. So as you can see, you swing from, you enter there, and you exit over there. Okay, but that's the bearish formation based on what I explained before. So speaking on that, now let's take a look at the bullish formation. Okay, some of what I told you, in order to catch a reversal, previous structure must be broken. And what does that mean? That since this was a swing point, and you see how price comes up here, it broke that structure, which was significant. So what does that mean to me? I need to start looking for buys. Okay, since structure is broken, I got to start paying attention to volume and, you know, trend and my other confluences and confirmations, because they will help me identify whether or not I want to take a buy. So in this market, I can see that, you know, there's a whole area of, you know, support and resistance over here sitting here, which is why you can see price comes here and it rejects again. And then you can also see price broken structure. So we are now in the bullish formation. And with that being said, we have a new swing significant structure, okay, and a new one as well, which these are swing points from what I told you. So every time price is breaking, it just sends you more confirmation that we are in a bull trend. All right. So with that being said, the only way that this does not go back to being bearish is that basically is that you cannot, let me just erase this real quick, is that you cannot it cannot go lower than this last low. And as you can see, price never went lower, so we are still bullish, so which means that you can still hold your trade. So if you enter right there and price never comes under this or touches your entry, you're still in the trade, okay? So make sure you are basically staying in the trade until price shows you that something else is done differently. So with that being said, you're still in the trade, and you want to make sure that your profit is at your swing high, your very highest swing high, okay? So basically, as you can see, every structure is being broken every time, so we're still in a bull trend, all right? And it's just your last, remember, since this is your last swing low, you're still in the trade until you're shown differently. So basically, price comes up again, takes out that high, we're still in continuation, all right? And then price comes down again, and it makes a new significant structure low and takes out that high. Price comes up again. What does that mean for me? It basically means that, wait, how do I see it? Let me see, eraser. Let me go back real quick, I'm sorry. Oops. So, and clear eraser. So what does that mean for me, basically, is that since price finally broke a new structure, and it's identifying as eraser pen. So since price finally made a new low that broke previous high, we can now say that this is our new low. Okay, so that low cannot be broken. If that low is broken, then we're going back to the bearish market. But as you can see here, price comes down, makes a new low that comes up, but it does not make a new high. So what does that mean? This is noise versus structure. So this is what I'm going to tell you later down the PowerPoint. If you cannot identify noise versus significant structure, you're just going to mess up. In other words, your market structure will be very useless. So what I mean by that is basically, if you take a look at this, let me erase this for you real quick. If you take a look at the eraser pen, if you take a look here, you can see how a new high was never made. Okay, so which is why when price came down and took out this low, it doesn't mean anything to me because it's just noise. In other words, it just creates confusion to you. All right. So if price never comes down here, it is still bullish. As you can see, price just came over here and created a rejection zone around there and took off again. All right. So if you cannot identify your market structure correctly, you will mess up quite a lot, quite often. So you can make sure you're able to identify your noise versus your important structure. So here is the most simplest way to put market structure and price movement. All right. So as y'all can see here, we have a higher high, higher low, higher high, higher low, right? Higher high. I'm sorry, higher low, higher low. So since this low takes out this high, we are in a continuation. Okay. And then basically, when price comes down and takes out that low, what does that mean? We are now in a bearish market. Okay, so does that mean to me that basically when you start looking for an entry, which is basically why price sold off right there. So you enter somewhere there. Okay, so basically you can see here the breaks of the higher low shows like potential weakness. So when it breaks that previous low, weakness basically identifies as sells, incoming sell, or bearish market. Okay, so when you are, and then after that, just following the break, we may see trend continuation to the downside. Sometimes we can see a fake out. Like this example does not necessarily mean that we will always, it's always going to go like that. Because on the Visa play, well, I'm not going to be going over the live example. I'm not going to be going over the live example. So basically, Cozy Wall, I don't know which pair he's going to go over. I don't know which stock he's going to go over, but he's going to show y'all something. But I do have an example of this on Visa play, basically where there was a fake out, which appears to go bearish market, but it shows exactly what it's going to do afterwards. So yeah. Next one. So here's an example of price movement. Okay, so remember, all these are swing points. Every single red highlight arrow is swing point. And I told you, since the market never made a new high, yeah, let's start from the basic zip. All right. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and then higher high. Cool. So now we see what we call trend. That is what we call a trend. Okay, but paying attention to how price was breaking each and every single high is what we consider basically market structure. All right. So where's the pen? Where's the pen? So looking here, this was never broken. You know what that means to me is that we're still bearish. And then this low takes out that high. So we're still in a continuation. All right. That's how I define market structure. So with that being said, price comes back down again, never takes out that low. We are still bullish. It comes up again, takes out that important high, consolidates. This consolidates, makes a new low, comes up again and takes out that high. Okay. Break of structure again, same concept, comes up. All of this is basic significant low, comes up, makes a new high, break of structure again. All right. And then basically this is the next significant low. So if price comes under that, what happens? Basically we become a bearish market. All right. So what does that mean? You can see how price comes up here, makes a new low. However, it does not become significant until we break this high. So as you can see, price comes up, never goes higher, comes down, but it breaks that market. Okay. How for now, that does not mean anything. Okay. It doesn't mean anything. We're not bearish until we break that significant low, which is in this box right here. So as y'all can see the green line, price broke through. We are now in a bearish market. Now we want to look for bearish signs and bearish entries. Okay. So as y'all can see here, we probably have like a resistance zone up there, or you know, up there, depending on whatever you want to do, or you can just say resistance up there. So price can just come like that and swing off, or it can come up here and use that as resistance zone and then just jump off. So that's an example of price movement. It's broken. I mean, Cozy's also going to break it down for y'all in the live example as well. We are almost done with this presentation. We look at the rolling. So yeah, so significant structures, like I told you. One, this is a significant structure because it broke this high. This is significant because it broke this high. That is significant because it broke this high. Okay, so these are all significant structures, right? But how do I know which one is important at that current moment? Is the last previous significant structure. Okay, so which means that no, you don't have to wait for all three of these to be broken or all two of these. The very last one is the one that tells you whether or not you continue bullish or bearish. Okay, so that's just something to pay attention to. You know, like I'm saying, like I said, since price came over here and broke that structure, we were bearish, and that's one of the most simplest ways to put it in market structure. I mean, I can go more deeper than this, but I do want Coach to be able to cover the live example, and I don't want to take all the time. You know, so yeah. What else do we have here? So yeah, is it worth focusing on market structure? Yes, it's a very organized approach. It allows assurance of structure, is very reliable, and predicts direction. Okay, so if you're able to like basically go through all of that, right, then you will be able to like be able to predict market a little bit better. Okay, so with that being said, I'm gonna make a really quick. Let's see, I'm gonna make it really quick. Where is my poll button? All right, let me see, Control P. No, that didn't work. Whatever. So I was gonna make a really quick poll to make sure y'all can actually identify. I don't think I can see that button real quick. Yep, I don't see it, but I'm gonna ask you a really quick question, basically, and I want y'all to tell me in the chat. You need maybe 5 people to be able to answer it. So if you can answer it, then I know that I have a little bit of, you know, whatever. So just 5 people got to get it correct. And basically, how do I know when this area, no, try to make it simple. You know what, let's use a different example. I'm trying to make it easy. I don't want to make it too complicated. Okay, how about this? Why is this area a significant structure? I just need 5 people to answer it, or 4 or 5 in the chat. Why is this area a significant structure? Like just 5 people to go ahead and answer that in the chat, so that way I know that we can see that you can be able to probably twist it up. 5 people. Anybody can answer it. You can answer it too, Cozy. You can just type it in there. Actually, no, don't answer it. Significant low. That. Yeah. So the question was, why is it a significant low? And the simple answer is because it broke this high, and we're in an uptrend. That's all that matters. That's as simple as the question goes. It doesn't matter if it's a low, it's a high, it's a pretty face, it's this, it's that, it's whatever. It doesn't matter what it is. All that matters is the fact that this low took that high. That is all that makes it significant. That is all that matters. Okay. So if you can identify that, then that is all that matters. All right. And the last question we're gonna have here is, why did price become bullish when it was bearish? It was bearish this way, right? Okay. But why did price become bullish from here? Okay. So you see this last low. What made me say that price will become bullish after it was just bearish? So why did this area become bullish all of a sudden? That's the last question we have. I think we need at least the second low point.
Because that broke the previous low.
That's correct. I mean, they answered in chat. Yeah, I was gonna have y'all just make sure you answer your question in a chat. But yeah, the correct answer is basically make sure I erase this all. Is basically this high. You see this last high, a lower high, became an significant structure, and it came down and took out this low, which means to me that that is significant because it took out that low. However, price reversed and comes all the way back up and had a break of structure, which means that we are now in the bullish trend. Okay, so we start looking for buys. And in other words, to make it really simple, that low took out that high. Same concept for bearish versus bullish. There's really no difference in them. You just got to get better at identifying them. So with that being said, Cozy's going to go ahead and take over. You know, he's going to go ahead and take over the trading view and go from there. I hope you enjoyed the PowerPoint. I will also be answering questions in the chat, the little Zoom group chat, so that we have a question for Cozy. He can go ahead and you know, do whatever. So yeah, while he's doing that, let me go ahead and tell him to share your screen. Stop the share. You share your screen. Go ahead and share your screen, and then take off your mic. I'm gonna go ahead and mute myself real quick.
Good afternoon, everybody. My name is Cozy. I am one of the instructors in the Genesis group. Let me go ahead and share my screen right quick. Can you enable me to share my screen, Naz? It says host disabled. Now, let me know if I can see me right after that. All right. Okay. Can y'all see my screen?
Yes.
All right. Okay. All right. So I wanted to start with AMC because it's one of the pairs that I mean one of the stocks that I recently been working on for like 2-3 months now. But like Naz was saying, market structure is basically higher highs, higher lows, and lower highs and stuff like that. All that stuff, just knowing how to identify that stuff, because if you fail to then, the market works with market structure, literally. Like market structure is the market. If you don't know the market structure, you're going to lose a lot. But first thing first, I like to start on the daily time frame. If you have TradingView Basic, you have basically like the daily 4 hour, 1 hour, and 30 minutes. But the daily is good for stocks and whatnot because it tells you the story. All time frames do is they just tell the story of price during a certain time frame. But with AMC, let me do this. All right. So with AMC, we were in a downtrend right here, right? Just like what Naz was saying. You can draw your little trend line right here. We're in a downtrend, right? And basically, price stopped right here, right? Can you see that? Price stopped right here, then it started ranging. So basically, this right here is this point right here made the slow, right? Let me see. All right, can you see that? So this point made that low, and price broke the trend line, but we didn't necessarily break that. We didn't necessarily break the point that broke the low. That made a new low or whatnot, right? Let me show y'all. So basically, we started ranging from this zone, and from this point right here, we don't know where the market is going because we're not making a new low, and we're not making a new high. But until, let's go back to the 4 hour. If you zoom into the 4 hour, you can basically trade a zone like this because you know what's going on the weekly time frame, right? So basically, hold on, computer's going a little slow. Right here, after price tapped this support right here, we were in an uptrend for a little bit, and we tapped that zone. We didn't break it. You could have basically took a sell right here and took it to the downside, but we broke this trend line and came back up here and just tapped it. So from this zone, this became our new resistance. basically, because price was not breaking it. Let me delete this so I can see better.
So basically low to the high.
Yeah, something like that, exactly. So, hold on. Blank box. So you can see how you could have basically, this was a very good triangle zone, because you can basically sell right here, buy right here, sell right here, buy right here, until the zone breaks. Now, the reason why I put this right here is because on the 4-hour, same thing happened, right? Same thing happened. This zone right here failed to make a whole new low, right? And then we had a break of structure. Now, after that break of structure, we basically enter from the same point that broke the structure, because if this is resistance right here, this zone right here is supposed to make a whole new low. Let me show y'all. It's supposed to make a whole new low, right? Break this low right here, make a whole new low, and continue the trend. Since on the 4-hour, we were in a downtrend right here, a mini downtrend. But we basically broke it and made a whole new high. And this is when AMC was booming, everybody was getting in and whatnot. And from that, we can anticipate to enter when the market comes back in the zone. Let me show y'all. That's how it looked when I was marking this up. I mean, the other thing to look for, guys, when you're analyzing a stock or something, is look at voids, basically gaps within the market pricing and all that stuff, because for price to be healthy, it has to come back and basically fill that gap. Most of the time it doesn't, but if you have something like this, if you have something that basically lines up with the way you trade, your trading plan and stuff like that, if you can add void in there, and it's just another confluence basically. So the reason why I had this here is because this is a zone that broke structure for one, and for two, this is a zone that price left the void in. So for my analysis, I know that price has to come here and basically fill that void. And if you are a Fibonacci person, you can basically use a Fibonacci as well. From this zone right here, this is basically the discounted zone. You know, there's premiums and discounted. You always want to buy in a discounted zone and sell in the premiums. But if I turn on my my Fibonacci lines, you can see that this is somewhere below the 61.8, if y'all know what that is. And from, I don't know where it's not deleting. There you go. From there, you can see how the market played out perfectly fine. But that's just one example. What I want to really talk about is basically how to back test. You always want to back test, especially if you're like new to the whole technical analysis and all that. You always want to back test, because this right here, everything that has happened has already happened, right? We can't go back in time and basically try to get in from the things that previously happened. But these things tell us what the market might do in the future, or how we can basically get into the market in the future by knowing what the market did in the past. This is why technical analysis is very, very important, right? And for you to do that is basically just put market structure, the trend, support and resistance, all that stuff that Anaeze was talking about, put it in play of the previous zone. So basically, like what Anaeze was saying, we have, this is now us back testing, because we can get into this trade. We're just back testing now. We basically know that this is in a downtrend. This is the weekly time frame. It's the easiest one. The first thing I noticed on here is this low right here. I guess this is where MC started. This is in 2014. We have that low right there. We basically made that high. Now, check this out. Look at this. We made that high, and basically, you can say that this is a break of structure, but for me, it's not. You know, because this is a point that made the high, so we haven't broken it. Just like what Anaeze was talking about. If we haven't broken the zone that made the new high, we're still in that particular trend, right? So from here, this is what happened. We had this high right here that price failed to make a whole new high, right? So price failed to make a new high, and we started retracing. So from right here, from this point right here, we're basically still in a uptrend, right? But until we broke this right here, because we already know that price goes to make a new high. So we broke it right here, right? As soon as you break it, we know that we're basically, you know, switching trends and there's weakness and all that stuff. So we enter from this zone that broke the structure, which will be now your resistance, which is exactly what happened here, right? Price came, boom, hit resistance, and basically sell. But the thing about it is, this happened on a weekly time frame. I'm showing this on a weekly time frame because it's the easiest time frame that you guys can see everything on. But all market structure happens on every and each time frame. The important time frames to analyze market structure is like what Naz said. It's basically it depends on, you know, if you're a day trader, swing trader, and all that stuff. Me personally, I'm a swing trader, so I analyze on a daily. But you want to do this on like the 1 hour, the 4 hour, and the 30 minutes. That's what's going to give you more confluence, and that's what's going to basically work out more if you're like a day trader and stuff like
Hey,
that.
Cozy.
Yeah.
Can you do HD or BA real quick, just to like do like what you're talking about?
HD?
Yeah, HD or BA.
Home Depot?
Yeah.
All right, let's see.
Hold on, no. Finish what you're doing.
Yeah.
You can answer all these questions in the very end. Like I told y'all, answer questions in the end. Don't interrupt him. But yes, don't interrupt him. If you have questions, ask the Zoom chat. I mean, the Zoom chat down there, but let him finish what he needs to do, and he will mark up the pairs that he wants to mark up. And in the very end, if you have preferences, he will take over and tell you that, yeah, you're gonna do, but don't interrupt him or don't get on the mic. Just answer your questions directly to the chat. I'll answer them for you while he's teaching.
Yeah, if you have questions, just type in the chat. We're gonna look at them later. But that is basically how you utilize support and resistance, market structure, and basically the trend. I don't use trend lines personally because they don't do anything for me. Support and resistance and market structure is basically the way for me. One other thing though that you gotta keep in mind is what we don't use indicators, but when we do, the only thing that we use is volume, because volume is basically the only real indicator that basically works out there. Like volume measures the volume within a candle, right? And if we see something like this, hold on, you got to pay attention to basically candlesticks as well. This is something that we call momentum as well, because basically moves within the market. The market can be very, very volatile, right? And we can see how price is moving down, but it's moving down with so many candles in it. And those candles are little. Like you can see the bodies of the candle, they're super little versus how it moves up. You see how it moved up quick, right? It took all, I don't know how many candles this is, but it took a lot of candles to go down versus a lot of candles to go up. This just tells us that we are in a bullish market until, notice this, guys, notice this. Notice how when we were going up, you know, like from right here, the market started slowing down until it retraced. And look how quick we came down versus how slow we went to basically retest and continue to sell. Those are the things that matter a lot in the, what do you call it, in the market, because it gives you a sense of direction. It's not like the Holy Grail or anything. It's just when you mix them with market structure, trend, support and resistance, all that stuff, it makes sense. And the other thing is candles, I mean the patterns, the chart patterns. If you don't know what those are, then that's a good thing to learn too. But other than that, guys, that's basically it. I just wanted to show y'all an example from MC. I don't know what Nez wants to do next. Nez, can you mute yourself?
What'd you ask me?
No, I'm just saying, like, that's basically it. The only other thing that I wanted to talk about is AMC right here, based on everything that Ness talked about. This is the last thing that I had to talk about. But from that zone that I was talking about, that price had to come and fill, we see that it broke structure right here. And the reason why I put this as breaking structure is because this point right here, let me mark it down. This point right here made this new low, right? Even though it wasn't a low, but like it made that low to fill that void. And after that, we basically broke structure, right, to the downside, and I mean to the upside. And when we broke structure, price was right here. Let me show y'all. Price was right here. And this is just utilizing the concepts. So like this right here is basically a mini downtrend, right? We're basically going down just to retrace. So it's basically a retracement. And after breaking the structure, we have to look at the zone or the candle that basically broke that structure, which is this right here, right? This zone, this whole zone right here is what caused the broken structure and whatnot. So for this to continue up, price has to come down here, right? The zone that caused the break of structure and continue to the upside, and which is exactly what happened, right? Even though we played in that zone a little bit, but still, if price had broken this, if price had broken the zone right here and went lower, no, I think I'm putting too much. Let me see, I'm sorry. All right, there we go. So like if price broke this right here, then we basically would have anticipated something like this, you know, and continue lower back to this support or this support right here, just somewhere right there. That's just because we know that we know market structure and the market has to come down there and go up for it to continue the trend, or else it breaks it, right? So one thing that you wanna basically keep in mind is the point that made the new structure or the new high or the new low. If we're in a downtrend, if we're in an uptrend, we cannot anticipate, if we're in a bearish market, we cannot anticipate a change to a bullish market until the high that made the low is broken. And same thing right here, since this is a bullish market, we cannot anticipate a change to a bearish market until the low that made the high is broken, which is why we bought right here, because this is the point where, you know, he has to go ahead and continue the trend. But other than that, though, that's basically it. Naz, what did you say we're doing next? I can't hear you.
All right, there we go. All right, so what you said one more time?
No, I said no, that's basically it on my part.
Okay. Where's the chat? Where's the chat thingy? All right, so y'all are basically, yeah, so that's his demonstration on AMC. As you know, the concept works with almost every single pair. Like, you know, look at this little bearish market right there. There's a break of structure. Well, there's actually a break of structure up there, which is why, you know, he had that particular matter right there. Whatever, this is a W, this is Walgreens or whatever. Do me a quick favor, and I want you to help them identify how this was a bearish market and it switched to a bullish market, despite the fact that there was a resistance, a support down there. Because you see, this is the same concept that I had in the PowerPoint, all right? So remember I told y'all there was a quick formation where the bearish market was going down, and then yeah, go ahead.
And I saw a question in there that was saying something about this that I'm about to show y'all. So it's the same thing, right? Like what Nez was saying. Hold on. So like let me draw a box, because so like there's this swing low, or this low in general, right? So if we look to the left, we see this high that basically was not broken, right? And this low right here caused that to be broken. And now we made a whole new high, right? I go by the body and not the wicks, because volume measures the body and not the wick, the body of the candle, basically. But so you can say that some people, you know, will say that, you know, this is basically the retest of this, because it went down to the, what do you call it? It went down to the 61.8 Fibonacci and stuff like that. But the reason why we like to buy lower is because high risk reward basically. But if you would have bought right here, this what would have happened, which is what happened. You know, you draw a trend line right there, or the other way around if you want. But price basically made a new high there, but we failed to break this high right here, right? We failed to make a brand new high, first of all. So this breaking structure right here tells me that the market is going to go lower. This is how you can basically protect yourself from losses and stuff like that. You know, if the market breaks structure early without breaking the high, then, you know, it's basically going to go the other way around. And the other thing is, Nez, what was the other thing that you said?
So what was I saying? Like where it switched to bullish?
Yeah.
So basically, do you see how it was making lower lows, lower highs, lower highs, yada yada yada, all that kind of stuff, right? And then
so you talking about right here?
hold on. Yeah, I'm talking about right there. Yeah, exactly right there. Hold on. But,
Okay.
there's something I want to demonstrate real quick. Okay, hold on. You know, give me my screen real quick. Let me hold on.
You can draw in here, right?
Hold on. Let me make a trading view. Let me pop up my little thing view so I can get it all the way. You know, that way. All right, let me log into trading view. And we are looking at Walgreens, correct?
Yeah.
All right.
Yeah, WBA.
Walgreens. Okay.
Oh, shoot.
Let's take a look at that. All right, Walgreens. WBA. Let's take a look at that. All right, clear chart. He is on the 1 hour. I'll open the 1 hour too. I'm gonna go ahead and share my screen.
All right, hold on, stop.
There we go. So as y'all can see here, we have Walgreens, you know, which is WBA. So basically what I'm identifying is I want to show you something real quick of how we can see a flip in the market and what I was demonstrating in PowerPoint. Basically, as you know, we have this little, okay, let me tell you this. Forget about what we see over here. Okay, let's just pretend we can't see it. All right, I'm just trying to show you how to look up market structure in a different direction because I'm not trying to complicate it for you, but here we have a lower high. Okay, lower low, lower high, lower low, lower high. Okay, so on. You can see every single thing. I'm gonna make a highlighter to show you every single point. Lower high, lower low, lower high, lower low, lower high. Liquidity, lower low, lower high, lower low. Okay, perfect. Right. So remember I told this is the significant structure. Price broke it. And what does that mean to me? But you know what's funny is that price never slowed down. All right. So this is where confirmations and you know, trend and like confluences come in. All right. And volume, especially volume. So you know, this volume looking too strong, you're not gonna want to buy just because we saw that little break of structure. So you actually got to be able to identify price more than just looking at market structure. All right. Of course, we have a breaker right there. Actually, we're not going to go into that. Yeah, we're not going to go into that. I'll probably show you that week 4. I'm pretty sure I'm probably not going to get a t-shirt at all because I'm not going to t-shirt. But what I do know is that since we have a break of structure right there, which was significant structure, that's technically where price is supposed to reverse. However, price never slowed down. Okay. So if I zoom in really quickly and you come here, you can take a look at momentum versus you can see momentum is favoring the downside. All right. See, momentum is favoring the downside. Clearly, we are not still looking to buy just yet. Okay. So you got to be able to pay attention to momentum, pay attention to trend. You can see how volume is slightly picking up. Okay. So I'm not going to want to sell just yet. However, we go back to the bearish market once it breaks this low. Okay. So since it broke this low, let me click this trend line. Since it broke this low, we are now back in the bearish market. So what we can do is find like an area of support resistance, since that's what I'm talking. That's what I taught you on week 1. So just get this out of the way. And of course, your target will be all the way, maybe down there. since that's the low that took out those highs. So this low took out those highs, which means this is your significant structure. And why is that? It's because you can see how it just plummet up and takes out those highs. All right. So that's your important structure. So basically, I'm gonna use a horizontal ray, and your take profit should be slightly under. As you can see, hit that take profit immediately, went back up. But let's go back to what I was demonstrating. So as you can see here, we have that little area of bullish market. The price came up, rejected, and it went all the way back down. Okay, too much momentum, too much volume. All right, and then broke structure again. We are now down to the back. I'm sorry, we are now down to the bearish market. So what are you gonna do? You're gonna go look for your little zones. All right, all that kind of stuff. You know, tell yourself, where can I enter? Where can it be a good supporter resistance? All that kind of stuff. All right, you're gonna go ask yourself all that kind of look for little zones, and maybe you can dance around it a little bit. You know what I'm saying? As you know, there's also another rejection right there. So you got 2 entries within WBA, assuming that you want to enter, like in the money, out of the money, whatever. It doesn't really matter. All right, so you see price comes up, rejects right there directly. Nice entry. Your first entry's in, or rather limit, whichever it was. There you go. You're now in the trade. Give me a second, make this a little bigger. So you can see that was, I guess not coming in bigger. I guess it's going to get bigger. Okay, there we go. So direct entry in. Then you sell from 48 to 46. If you take in the money, that's quite a lot of money. So whatever. And as you can see, this with your target going down there, right there. Boom. As you can see, target hit. Now the real question is, how do we know we're still in a bearish market? We're not anymore. So you can see this quick reversal. Why is that? Price broke this significant structure. What makes this significant? It take out that low. Okay, remember I told you, high highs, higher lows, swing points, all that kind of stuff. These are your swing points. Let me actually use a different color rectangle. Swing high, swing low. Oh, no, swing high, swing low, swing high. Nah. Well, okay, we're gonna use a swing high. We're gonna use a swing low. All right. We're also gonna use this as a swing low, and then this as a swing high. Okay, so these are your swing points, but they're not your market structure identifying points. Okay, the point that's really going to help you is identify those market structure, the significant structure. Okay, if you cannot identify those, good luck. I'm not saying good luck in a bad. I'm just saying good luck is that, you know, just whatever. So yeah, as you can see here, this is also a significant structure. This is significant because you can see price goes down, then makes a new lower low and takes out these high this low. Okay, so significant structure, then price comes up, makes a new lower high. All right, then price comes down, takes out this low as well. So this is significant structure, right? And then bring it back up. You see price hits our target. So we took a sell from 48, took profit at 46. All right, price reversed. Okay, and it broke that significant structure where I told you, you got to be able to identify your significant structure. And once you did, then you can say, okay, around there, price was diminished and was slowing down. So if you had a resistance, remember I told you, look in the past to identify your resistance zone. So you can probably just go like right there, maybe a little higher, and you're going to see how that was an area of resistance area of support. This would be your entry for the buys. And then if you understand more detailed aspect of charting, you can identify your chart patterns and all that kind of stuff. You're going to see how this also broke what we call momentum trend. All right, that's a whole nother story. I have not really taught that yet, but as you can see, this is what we also call a bullish flag, except this is it's quite a long one, but it's just an over exaggerated bullish flag. But if you really want me to tighten this up, I could, and I can make it what we call a breakout wedge. You know, so price comes there, takes out. Of course, this is for your first take profit because that is your most significant structure as composed to where it became bearish. So you would enter at 47 and take profit at 51. All right. So you can take more profit per every single swing boy. It says you're colorblind. Okay. Is there a preference you want me to use? Do you want me to use a darker color, such as like which colors? Do you mean the Okay, let me see this. Do you mean, is that better if I use pink or so? like, do these look any better for you? Or would you like to make them a little bit? Okay, perfect. Yeah, great. Okay, there you go. Perfect. Perfect. Okay, fantastic. Okay, no problem. So yeah, as you can see, those are your rejection zones and all that kind of stuff. So as you see, we enter the market right there, in the money, out of the money, whichever it is, and you can see we swung all the way through. And you can see that breaker structure. Technically, our full outtake profit will be all the way to 55, because that's where we had that last entry and all that kind of stuff. So, you know, that's just a way of combining market structure and using supporting resistance zones. But basically, yeah. So with that being said, yeah. But questions? Yeah, let's take some questions now. Yeah, we'll take questions now. I'll suggest taking questions. I'm pretty much done. So yeah, what kind of questions do we have so far? How about we take questions, then I'll take personal markups. Yeah. Instead of, yeah, let's just do personal questions first and then we'll do markups. Because I mean, I'm not really supposed to be marking up anything today. It's just teaching, you know, because I don't really have any interest of doing personal markups today as of right now. So BA is bullish though. You know, BA is bullish. But
Can you show them how to
type,
set up the
do me a
Fibonacci?
favor and type.
Yeah, so somebody was asking about that.
Oh, that was you talking?
Me?
That was you talking?
No.
Oh, this is for Jose. Give me a second. For Jose, BA is bullish. You can see that breaker structure. Well, first of all, this is the daily time frame, so this is gonna be a little bit more general. No, this is the daily. This is a daily time frame. These are basically your swing points, but I'm not gonna say that. I'm actually gonna take this one instead. So 214. But the thing is, that's such a huge, drastic length to the point that I wouldn't tell you, oh, BA is bullish until it goes below 214, because that's stupid. You know what I'm saying? Why are you gonna wait for a price to go from 269 all the way to 214? So this is gonna be how you basically use time frame confluences. Okay, so on the daily, that's just too long to wait. Okay, so let's take it to the 4 hour. All right, and as you can see, in the 4 hour, we're not really gonna swing points the same as a pivot point. Cozies, that's the same thing, because
The same thing as what?
look at the chat. Someone just asked if swing points the same thing as a pivot point.
Oh no, not necessarily.
Yeah, that's what I thought. So, so when you go to the lower time frames, you can see here that, oh, this might take. But you can see here that you would rather just wait for 249 in terms of long-term aspect. So it's still bullish until it comes over 248, but that's also too much for me. So I go even lower, because you got to be realistic. Okay, you got to be really realistic. You're not going to wait for the market to come all the way down to 249. All right. So when I start seeing unrealistic swing points, I go lower and lower. Okay. And as you can still see, yeah, we still have like the downside about this. It seems like that we can start going a little high. We have 255. You can see that little break of structure because it made a little. So we have 255 now. And then as you can also see, that's my fault. And as you can also see here, we have another swing low because it took out those highs. I'm sorry, not a swing low, more like a valid structure. So as y'all can see here, we got that point, and we got that point. And then it's also making, once price breaks through this, I'm sorry, already did. So our point is 266. It remains bullish as long as price stays over 266. So prices are what? 269. So as long as price does not go under this zone, we are good. Okay. So basically you have to go to the lower time frames to help you identify market structure, because the higher time frames would be way too big to fully tell you, to fully give you a good grasp of market structure. Unless you're really trying to swing heavy, I'm talking about you enter blah 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 blah. I know people ask about Fibonacci. That's week 3. I'm not doing anything with Fibonacci related today. That's week 3. So actually, I already made a video about Fibonacci already. It's in the chart teacher plays as well. So, or my TikTok, you can watch one of those. But yeah. So for BA, you are still bullish until it goes above under 265. So you can also see with the methods that we use, me and Cozy, you should have basically entered BA around 267. You can take your profit if you're in the money, you're basically in profit. But yeah, I don't know why I'm having a headache. So, but my TikTok is, let's see, what is my TikTok? I have 2 of them, but you can look at the oops, I'm sorry. It's basically, what is my app? So it's basically, my TikTok is the same thing as my name. So basically, you can just look at that, or you can look at the one that says Anaeze Trades, I believe. So let me go ahead and take a look at that one. Yeah, so that one's also gonna be, or you can look at this one. So there's a Fibonacci video there. A whole bottle of water. I'm not sure. I mean, I may not, but yeah. So I did Fibonacci's over there, but yeah, for BA, it's still bullish. You know, for HD, it's, what is HD anyways? Okay. Looks like we're forming a little bit of distribution here, so we could see a sell-off. I don't know just yet. Let me take a look. It seemed like it just filled the gap. We are sitting at probably 68.8 of the gap. This right here is a Fibonacci. I'm gonna bring it out just for now. Yeah, so we're sitting at a little bit over, oh, that's the wrong way, that's the wrong way. All righty. So price could come up and start selling at the 78. It could start selling at the 61, but I'll have to do a deeper analysis. But as of right now, it's still bullish. I don't really see any reasons for me to start selling just yet, but I do see distribution forming. But as of right now, Humpty Body is clearly bullish, you know. So pretty raging run. Pretty raging run. Let me move this up here. Maybe down there. Or up here. Yeah. But bullish for now until shown differently. But yeah. Any other questions? Since we don't wanna, I don't want to make this webinar too long, you know. So yeah. Questions? You can talk on the mic if you want, actually. Anybody? What does bullish mean? Bullish means up. Bearish means down. Any other questions?
So you only use volume as your indicators? You don't use anything else?
Cozy, take the question from me.
Well, yeah, we don't use any other indicators because indicators are basically noise to the market. The only thing that indicators do is they help you. They basically translate, you know, what the market is doing to you. So if we can translate what the market is doing just by looking at it, and you know, just by knowing market structure and our swing points, the lows and highs, and we don't need indicators. The only thing that we would necessarily need is the volume indicator to tell us the volume within the candle. And most of the time, for me personally, the reason why I use volume is to basically, it helps when you're trying to catch a reversal or like a continuation, whatever. But it mostly helps when you're trying to catch a reversal because you can basically, we can tell how much volume a candle is. Like when the market is going up and there's no volume supporting it, then it can basically fall anytime. You know, that's how we use volume. That's about it.
So do you search up news also, like on the stocks that you're about to like look at, or you just use your market structure information?
Me personally, I don't do that new stuff. I just everything is in the technicals. The news basically come in like they come in like after technicals. Like if I have to search up stock and stuff like that, I do that after the technicals. But I don't necessarily do it. I don't need it.
Market structure works for everything. Market structure works for everything. It doesn't really matter. It's actually market structure is going to help you identify when the market could actually possibly reverse as well. But like I said, it's more than just market structure. You got to be able to use fundamentals in a different way. What I mean by fundamentals, basically looking at DXY. All right, so this is DXY. DXY tells you a lot regarding what the market could possibly do. But I already sent a picture on this, so I don't really want to go over it again. But yeah, as you can see why the market's been bullish ever since. It's because DXY has been down. And then, of course, we have the same concept right here, you know what I'm saying? Significant structure right there. I'm sorry, highlighter. It's the 2-day, but the thing is, like, this is a really far graph. So this is a break of structure. Price came up here, broke structure. We were still bullish. Price consolidates. When you go to the lower time frame, you can probably see a reason why price went bearish. Like, you probably see something like this over here, like right there, break of structure. You can start looking for your entry zone right there. Wish your entry would have been up there. Your entry would have been right there, and you can sell it off to. Well, you don't trade DXY, but just can you look at WDC? But yeah, DXY tells me what basically happen with the market. But let's say we didn't have such thing as Federal Reserve, all that kind of crap. The market would crash, But they're always going to step in. They love their money, They love their money. The rich love their money. So, basically, we won't see another crash because the government's going to step in, dump millions or trillions of dollars into the market, and then when they do, DXY will go down, the market will go up. So if you can learn to look at DXY, which stands for payment the dollar index, then you would do a pretty good job identifying whether the market will become bullish or bearish for the day. Bullish or bearish for the week. All that kind of stuff. So yeah, WDC. Hold on. 3 for Josh. You need 3. You need 3. For Ben, I mean, I know what I'm looking at. The market is definitely going to become bearish for quite a bit to me, but there's a reason I say this. It's because if I'm correct, this is what we call intent, and basically after intent, it sells off like to scare. Because the thing is, a lot of people will buy. Because you see this massive just bullish movement up, right? People will buy. Then once it breaks that previous high, a lot of people will still buy here, and then guess what? They sell off. Okay. But the thing is, how do we find our entry to go back to the upside? Like right now, remember I told you it's probably going to sell. We have that confirmation that the market is bearish. Okay. I'll probably have to find my entry in like the 1 hour, but as of right now, that was our entry. Our stop loss will be a little bit higher. As you can see here, so you would enter at like what? 70, your stop loss is like a 71.90 something. And as you can see, you're still in profit. But I would have to do a deeper analysis than just what I'm showing you right here. But we got to break a structure to the downside. As you can see, it broke this structure. So we are currently on the downside. So right now it's bearish for me, you know, so that's just a prime example of how we use this. Yeah, right there, swing points, you know, so, but, so for me to say this could be a continuation, I need to see price continue to sell off and break 66. If price breaks 66, perfect, fantastic, then we're gonna need to hold above, 69. So price can sell off, come reject over there because it's a rejection zone, sell off, you can take your profits at 62, all that kind of stuff, you know. That's just a prime example. And to answer your question again, Josh, you need three to five confirmations. When you have 3 to 5, you can take a trade. If you have 2 bullish confirmations, the 2 bearish confirmations, don't take the trade because that's basically 0 confirmations. You're just second guessing. You're just gambling. Yeah. So for WDC, it's bearish for me for now. I'm not correct all the time, so
Yeah,
make sure you do your
that's a nice distribution schematic right there.
Yeah, that's also distribution, which means that in reality, my true target is probably going to be like 55. But I don't know what WDC is. I don't know what Western Digital Corporation is. But like I said, if DXY does become bullish, the markets will become bearish. Okay, I just don't know when.
Guys, can you show them how you would use
so
scenario?
the hard drives, yeah, technology will definitely become bearish as long as if the market goes down, AMD is going down, Tesla is going down. Like I still think Tesla can go to 405. Okay, I'm sorry, 420. All right. So
excuse me, sir. I didn't want to interrupt, but can you explain market structure and just a tiny bit more like detail, like tips and tricks?
yeah. Yeah, let me do that for you. Actually, Cozy, you want to do that one?
Market structure?
Take over my screen. Take over my screen. Let me get something done real quick. I need to pick this up. Yeah. Share your screen for me.
All right, hold on. Do this. Screen. Tips and tricks. Can y'all see? Can y'all see my screen?
Yeah, I can see. Yes, sir.
All right. Let me go. This is the same thing that we're looking at. Let me go on the lower time frame, just so we're all on the same page and whatnot. So I'm going to explain it on basically the pair that he was talking about. Let me box this right here. At the stop. But basically, in this case, this is how we would use market structure, right? So we have a high, right? We have a high that, was made and everything. Let me turn on volume. I wanted to show you about volume too. How I use volume. Not like this. I don't use that. But yeah, we have a high that was made, and basically for this high to continue, we'll basically look to basically catch the continuation around. There's 2 zones, right? These 2. My bad. All right, around these 2 zones right here. And basically, price made a new high and just boom, blew through it, right? So this is our breaker structure right here. This zone right here made a new high, right? This whole zone right here caused a new high to be made and broke the structure. And basically made a whole new structure.
So basically the high is the new low and low is the new high, basically.
Exactly, just like that. And like, yeah, literally, that's literally it. If you want to catch a continuation, basically just look at the point that made a new high. Like, let me show you an example. Let me show you an example, right? Perfect example right here. Look, this guy. All right, perfect example right here. So we're in an uptrend, right? Check this out. Price came, boom, boom, boom. Hold on. Price actually came and retraced from right here, right? Boom. So now we know that price came and tapped right here and basically broke this structure, made a whole new high, right? Now check this out. If you wanted to catch the continuation, you basically do the same thing, like enter from the zone that basically made the high. All right, check, you see what I'm saying? You see how price came down in this zone and basically took off. All right, that's literally it with market structure, stuff like that. You just gotta, know the swing points and stuff like that. So now if price had basically if price came down and broke this right here, then we would have anticipated a bearish market because the low that made the high is now broken. It's the same thing. Make it, I would urge everybody to make a trading view account or anywhere that you can chart on because it's very, very important. Now for this, same thing. This zone right here was supposed to make a whole new high and take out this high, right? But look at what happened. Hold on. Look at what happened. Instead of making a whole new high, we made a whole new low, right? This is our sign of weakness.
Bro, I get it now. Bro, you're the best, man. Thanks a lot.
Yeah, of course. But look, just one more thing. This is our sign of weakness, right? So instead of getting into a sell right here, because this will be too early, you have to wait for a retracement, right? The only place where we would enter from is the place where price is supposed to make a whole new high, right? Which is right here. So now from right here, we can anticipate, something like what Nance said, something like this, retest the zone and continue lower. So something like this, right? And it can be a short sell depending on where, the market is going. But with market structure, that's literally it. Like and then with volume, this is another trick that I wanted to show y'all. So check this out. So the blue, what was that? The green is the buy, right? It's the bullish volume basically. Check this out. We have basically bullish volume here. You see how it's going up? That means it's increasing, right? And now check this out. After making this high, but then basically price, after right here, price was going up, and there was basically no volume. Look at this. Look at this. Or you can even say from right here, from the high, yeah, right there. You can see how price was making new highs, but the bullish volume was going down. And then check this out. The bearish volume was coming up, was increasing. And same thing right here. Look how price is going up, but the bullish volume is going down with it. That's telling us that sellers are in control of the market, and we're basically now like switching trends. That's all. So you can add that with market structure and all that, and you basically be a beast. But that's basically it. Where's Naz? Did you have any other questions?
Yeah, I do have a question, but I don't know if it makes sense. How can you use like an old time frame to predict what the market will look like for a new time frame?
You say you bought Tesla, correct?
Naz, can you take over right quick? Are you back? Naz, can you take over right quick?
Is that for me or that's for you?
It's for you, but I gotta take this call so they keep bothering me. I know. Just take it right quick.
All right. Okay, so can you go ahead and repeat the question for me?
Yeah, sure. I said like, how can you use an old time frame to predict like what the market will look like for a certain stock for a whole new time frame?
Okay.
Does that make sense?
Yeah. Where's my mouse? Give me a second for my mouse. Okay, I got my mouse. I took it to the kitchen. My bad. That's my fault. Okay. So, which okay, here we go. Was there a particular? Do you want me to share my screen, or you just want me to like demonstrate?
Whichever way is more comfortable for you, it's fine.
Cozy, check your phone, please. Okay. Okay, yeah. So basically, how do I put this? How do I put this? Cozy, your phone. Okay. So basically, I'm trying to see the simplest way to put this for you is that. Yeah, let me share my screen.
Wait, Ness, hold on. Because it's already on my screen. Let me just do it on my part. So basically, I think you said, how can we anticipate when the stock is going down just based on one time frame? Is that what you said?
Basically, but like not just like a downtrend, like also like an uptrend.
Okay.
How can you like tell from an old time frame that it's gonna be the same for a new time frame?
Okay. All right. Makes sense. So, so the thing about it is, we don't look at it a certain time frame and just be like, oh, because of market structure, this is going to do this and that. No, like me personally, that's why I have all these time frames right here. I basically like start from the monthly, right? This is where I start. So let me get this up. So every candle right here is basically a month, and you can see how as soon as like this stock was put in, it just started booming up. And from right here, I can see that price only came down here to basically mitigate the zone right here. You guys don't know what that means, but mitigate that zone and continue up. So from this right here, I'm looking for so-and-so buys only. That's literally it. I'm looking for buys, I'm not looking for any sales. But that's why I said this right here, this can be a short sell because overall we are we're in a bullish direction, right? If you look at the weekly time frame, the daily time frame, it's the same thing. But one thing to keep in mind is that every time frame has basically its own structure, so you have to put them together. That's why Anaeze was talking about time frame confluence. If you can put them together, like if we know that because market structure works the same on all time frames. If we know that we're in an uptrend right here, right, we can anticipate something like this. This right here broke. So after every break of structure, there's most likely there's most likely a retracement, right? So we can go on a lower time frame and look for a retracement, which is something like this, right? To retrace, you have to know where you're going to retrace to, right? You can't just say that you're going to retrace and not know where you're going to retrace to. So it has to be on that time frame as well. So looking at this, the only place that WC can go to and still hold a bullish structure is right here, right? It can go right here and just bounce from right here. And this is all utilizing market structure just on different time frames. That's it. That's literally it. Do you get it now a little bit?
Yeah, it makes sense now. Thank you.
Yeah, that's basically it. That's all we do. But Liz, you can go ahead and
Yeah. Where is the chat? It says I need help with setting take profit location. Here, TP is always going to be the next high or next low. But that's the simplest way to put it until you get a better eyes of looking at the market, because sometimes we can just know when to take profit. It's basically just when you see a possible reversal in price action, okay? But for the most part, I would say just aim for the swing lows and swing highs when you're trying to set your take profit, because that's when they usually tend to reverse right after they hit it. So yeah.
So what Ned is talking about is basically like for this example right here, your take profit will basically be this low, and that low, because there is like below every low and above every high, there is liquidity, and the market makers, they go for the liquidity, which is the same thing that we do. So like this would be a first take profit basically, and oh shoot. And this will be your second take profit, right? The lows, but
Any other questions? So I can wrap this up. I'm ready to get out the webinar. I know y'all are too. So, golly, is there one topic that we should consider? No. The thing is, it all depends on how you trade. Like if let's say you're a crazy day trader, you're only supposed to use the minute time frame. Okay, there's no point of you looking at anything above the 1 hour. If you're a swinger, 4 hours, 5 hours, 6 hours daily, you know what I'm saying? It really just depends on what you're doing. What is your goal? What is your target? Like that's why I can't ever answer the question, what is the most important time frame? There is no most important time frame. It's just the fact that you need to understand that what is your objective? You need to find out your own objective of that particular trade or what you are. If you're a swinger, if you're a day trader, if you're just trying to take like quick profits, like if you're trying to take quick profits, trade off the 1 minute, the 2 minute, 3 minute, 4 minute, 5 minute, okay? If you're trying to swing in one day, take a look at the like the 20 minute to the 1 hour, you know what I'm saying? You can take profit at the highs. It just depends on, if you're buying, you take profit at the highs. If you're selling, you take profit at the lows. So yeah, 823 and Jasmine. Well, I don't know. Yeah. Okay. Yeah. So does that answer both of your questions? Yeah. So it just depends. If you're selling, take profits at the lows. If you're buying, take profits at the highs. Perfect. Great. Oh. And you go to sleep. God. But yeah. I'm gonna send this recording. I'm gonna send the link. There will be a passcode again. I will send it over to the Chart Teacher Plays. Watch it, download it, do whatever. Like I said, well, actually, this is not me for y'all. This for the people in the chat, actually. But either way, yeah. So if we do not have any more questions, I'm gonna go ahead and end this PowerPoint presentation, webinar, whatever you want to call it. At exactly. Can you sell it? Can you sell what? What are you asking me? Can you sell it? Can you sell what? Are you talking about WDC? You can sell that if you want to. I ain't telling you to do nothing. You know what I'm saying? You can do whatever. Like I told you, I send y'all a chart. You look at it. I tell you what I think it's gonna do it. I don't mean I'm telling you to get in. If you get in, I'm not gonna say that's your business, but it still is. But you know, like I'm saying. But make sure you are. Don't get it. Anyways, any other questions? Oh, Hot Pockets, I forgot to eat, that's why. I feel we should be assigned homework to do. Man, you really think I want to grade some homework? But anyways, that's fine. I can actually give out homework. Like if you're in this chat, you know what? That sounds good. That sounds good. You know what? Let's see. Let's see. Hey, what do you mean, where do I get those letters from? Where do you get those letters for your name? What name? Oh, my sister got them for me. I think she got them on Home Goods. I think that's where we got it from, the Home Goods. I think that's where we got it from. I think then John like 20 a piece or something, or 15 a piece, or 8 a piece, in one of those prices. But yeah, yeah, Shalice. If I were you, just send me any chart you want, and I'll basically tell you what you're doing wrong versus what you're doing right. However, how about we take a look at? I need something that's empty, something that's blank, something that's just there. So what is something that I never really worked up? How about we all take a look at, I don't think I really have marked up GM.
Look at 4.
No, so no. Yeah, I was hoping G9 would come on top, but because we're definitely the bearish market. Okay. This is going to be the stock that I want everyone to take a look at. So, Hexo. All right. You mark it up. You show me where you would buy, where you would sell, past and present. Okay, I'm gonna type it in. Where actually, I'm gonna hold on. Let me get my notes popped up. But basically, what I'm basically implying is it's not letting me take this other screen. Okay, fine, it's fine. Where is notes? So let me go ahead and get the questions typed up really quickly. So I want you to. So where would you buy? Where would you sell? Where is market structure? What is the trend? What else do you see? Also send me your chart analysis. Okay, here's the questions. You go ahead and type it right down there, right there. I'm also going to send it to the chart teacher place once I get the recording process. So that way, you know, it's supposed to be Hexo, it's your homework. And yeah, any other questions? Okay, one more question. Perfect. Alrighty. I guess we are basically seems like we're basically done. Thank you. I hope you all enjoyed. So with that being said, I'm gonna go ahead and close the Zoom. So let me click stop recording. Stop recording.